Most reputable institutions expect the UK to avoid a full-blown recession in 2025. Organisations like the International Monetary Fund, the OECD, and the Bank of England all forecast positive, though modest, growth for the year ahead. The IMF predicts GDP growth of around 1.2%, while the OECD estimates 1.3%. The Bank of England is more cautious, projecting growth closer to 0.8%. These figures may look optimistic on paper, but they don't tell the full story. Beneath the surface, the UK economy is flashing multiple warning signs, and many within the country feel a very different economic reality. While the UK may technically avoid a recession, defined as 2 consecutive quarters of negative growth, what many households and businesses are experiencing feels like a downturn already. Economic pain is being felt on the ground, and recent data from multiple sources reveals just how severe the situation is becoming. In May 2025, the UK retail sector's confidence plunged to -29%, the lowest level recorded since the height of the COVID-19 lockdown in May 2020. This alarming statistic was reported by the Confederation of British Industry, CBI, signalling deep concern across high street businesses. Meanwhile, confidence in the UK service sector, covering everything from law firms to hospitality, collapsed to -43%. Its worst reading since late 2022. Expected profitability also fell to -47%, levels not seen since February 2022. Just before the pandemic struck. In simple terms, businesses across the UK are seriously worried. Many are expecting tough times ahead, almost as bad as during the early days of COVID. They are not feeling good about the prospects for the UK economy, and they're not alone. Consumer sentiment is fragile. People are spending cautiously, holding off on non-essentials, and watching prices rise faster than their incomes. Domestically, Chancellor Rachel Reeves' economic policies haven't helped restore confidence. With a strong emphasis on stabilising the economy and restoring growth, Chancellor Rachel Reeves has positioned fiscal responsibility at the heart of her economic strategy. However, many critics question whether her policies have unintentionally made the situation worse. Take, for example, the rise in national insurance employer contributions announced as part of her broader plan, which has coincided with a noticeable decline in PAYE jobs. Employers facing higher costs are reportedly slowing recruitment or cutting back on staff. Supporters of Reeves, however, argue that she inherited a deeply fragile economy burdened by years of underinvestment and external shocks, and that steadying the fiscal ship was a necessary first step before pursuing long-term reforms. Internationally, Donald Trump's return to the presidency and his renewed America First stance has not helped either. With higher tariffs on UK exports and growing uncertainty over global trade relations, British businesses are finding it harder to plan and grow. And to that ongoing global instability, the war in Ukraine, conflict in Gaza, and tensions in the South China Sea, and it's clear that economic uncertainty is being felt far beyond the UK's borders. Another clear indicator that the UK may be heading towards a crash is visible in people's day-to-day spending behaviour. Many households are now struggling to afford basic essentials, let alone luxuries. A process known as de-saving is taking place right now in the UK. You may ask, what is this process? De-saving? De-saving is when households reduce their savings or withdraw from them to cover everyday expenses. This is taking place across the country. In other words, people are cutting back on how much they put into their savings accounts or dipping into existing savings altogether just to get by. According to the Office for National Statistics, ONS, in Q1 2025, the UK household saving ratio fell from 12% in Q4 2024 to 10.9%, marking the first decline in 2 years. People are putting off big-ticket purchases, skipping car repairs, and delaying home maintenance, all to make sure they can afford food, rent, and utility bills. This trend is not sustainable. Eventually, consumption will fall, and since consumer spending drives around 2/3 of the UK economy, that will inevitably have broader consequences. Debt can't fill the gap forever, With interest rates still high and credits tightening, households have less room to borrow. Poverty is also on the rise. Around 21% of people in the UK are now living in relative poverty after housing costs, including an estimated 20% of children. These children don't live in isolation, so their parents too are under severe economic strain. Retailers are already feeling the pinch. Despite heavy discounting and promotional campaigns, foot traffic remains low and online sales are flatlining. Nothing they do seems to be persuading people to spend more, especially when the price of essentials like food is rising faster than inflation. That's a clear recipe for a demand collapse. And when that happens, recession typically follows. Squeezed living standards, rising poverty, and collapsing business confidence are converging to reduce consumer demand. That's not just because people try to save during tough times, which they always do, but because high interest rates, monopolistic pricing, and soaring rents are creating a kind of economic pressure cooker. People are being financially squeezed from all directions, and there's only so far that this pressure can go before the system begins to break. Eventually, when people have to make tough choices, they cut back on what economists call discretionary spending, the nice-to-haves like eating out, new clothes, or holidays. And when that happens at scale, businesses suffer, layoffs begin, investment slows, confidence plummets. It's a downward spiral that can tip even the most resilient economies into recession or worse, depression. Of course, no one has a crystal ball. Forecasting the economy is never an exact science, but the signs of a recession are clear and present. Most reputable institutions might say the UK will avoid a technical recession in 2025, but on the ground, many would argue we're already in one. Growth of 0.8% to 1.3% may be technically positive, but it doesn't feel like progress for struggling families, overworked workers, or small business owners trying to survive. Rachel Reeves's policies aimed at stabilising the public purse have not addressed the deeper structural issues in the economy. Critics argue she has not done enough to stimulate growth. If we take a step back and look at the broader picture, the ingredients for a recession are all there: weakening demand, falling business and consumer confidence, rising poverty, and global instability. When you combine this with poor productivity growth, low business investment, and worsening regional inequality, the future becomes even more uncertain. Yes, we may avoid a textbook recession on paper, but ask the average person on the street, and they're likely to say it already feels like one. The government and central bank still have time to act. Rachel Reeves faces a critical moment this October as she prepares to deliver the autumn budget, and all eyes are on her. With the UK economy under growing strain and public confidence faltering, this budget will be a defining test of her leadership and economic vision. The IMF predicts GDP growth of around 1.2%, while the OECD estimates 1.3%. The Bank of England is more cautious, projecting growth closer to 0.8%. So is the UK heading towards another recession in 2025? According to the IMF, OECD, and Bank of England, the answer is no, not officially. Their forecast suggests the economy will continue to grow, albeit slowly, but economic reality doesn't always align with the technical definitions. When business confidence is collapsing, savings are being drained just to survive, and poverty is on the rise, it doesn't feel like growth to the average person. The warning signs are flashing across multiple sectors, from high street retailers to households under pressure. Unless decisive action is taken soon, the UK may not just flirt with recession, but fall headlong into it. If you like this breakdown, make sure to subscribe for more. Thanks for watching, and we'll see you in the next one.